Good morning, everybody. It's Chris Robinson, Robinson Ag Marketing. If you're not getting my letter, robinsonagmarketing.com, sign up for it. It goes out every day, Monday through Friday. Then I do a weekly wrap. Also, today I'll be posting it's about a 15, 20-minute webinar. We'll dig into the charts and the key levels that I'm watching. If you're interested in learning more about charts and technical trading, I invite you to sign up for that. Stock market's down a little bit. Crude oil spiked to 107 on the headlines. You got these corn. It's down a penny, but it's still sitting up there at $5. Novi beans made a new high for the move, 11.90 and a half. If we can get through $12, that opens up talk about the contract high. Contract high in Novi beans is 12.42. Contract high in December corn 5.12. This has all been driven by money flow coming back in on the long side. That money flow can fizzle very, very quickly, though. Remember back in April when we dropped 40 cents in corn, and then we dropped about $1 in the beans. So protect what you can. I'd rather be looking at nearly $12 beans and $5 corn than where we were at the beginning of the year. We were worried about sub $4 corn and sub $10 beans. Kansas City wheat down 9 cents overnight, 6.85. Again, that's going to be trading with the headlines, with the weather forecast. Continue to manage your risk there as well. That's a big part of what we do. It's managing risk. I do work with a lot of speculators, but if you're a farmer producer, you're a speculator. You're speculating with one arm tied behind your back. You're always long. Um, the other thing I'm watching too, I'm going to talk more about this week in my letter and also in the seminar. Looking at Dees and Nov. Dees 26 corn versus Dees 27 corn, and Nov 26 bean versus Nov 27 beans. That's a spread that you might want to keep an eye on if you are a producer. And in the cattle, cattle finished Friday a little bit lower on the day, but it really had a pretty good week. Cattle continued to, sit up here. At any time, I think we're subject to some sort of a black swan event. Or remember what happened in November where we dropped 85 bucks in feeders and we dropped 40 bucks in fats. Everybody got short, and then we turned around and ripped everybody's face off with a rally higher. So there's plenty of risk out there. I've got some strategies that might help you manage that risk. If you're interested in it, give me a call. I'm worried about the deferred months in lean hogs. They look to be rolling over as well after a tremendous rally. If they take out these support, you could get some long liquidation there as well. I do watch the money flow every week. Last week, the funds jumped back in with a bunch of new corn. We'll see if that continues. If the funds keep buying it, that's a good thing for the producers. But we've seen what happens when they dump it as well. We can break 40 cents very quickly in corn. So manage your risk. This is Chris Robinson, 312 638 8868. Happy Monday, guys.